All right, I think we live. I think we on it. Good evening, everyone. Uh, let's get right into it, man. Today we're going to discuss um, trade planning or planning your trade, how to set that up, what that looks like, and everything like that. So we're gonna go right over here to think of swim and get right into it. But first, we got to think of swim set up. We also gonna be going back and forth over here to Finviz. Let's start over here at Finviz. So again, just go over the screener and how we go through screening for our stocks. This is a daily screener. I mean, at the close of the day, you want to be doing this before the close, just before the close, during the day, or at the close of the day, after the close, and you want to go ahead and be looking for stocks, depending on what setup you're looking for. I've already shown you all the oversold, so we'll just go right there and look for that again really quickly, and then we'll go ahead and take some charts. We're gonna set. Okay, we go again. We go to screener, then from screener we go to all. Click all, and we go to price. Price. I mean, it's got prices here under 50, 140, over, etc. But for all intents and purposes, I like to do under $5 because that's what I trade, stocks that are under $5. Goodness, stocks that are under $5. We want to add average volume over 200,000. Average volume over 200,000. Then we go to performance. Performance. We looking at week 10% down, negative 10% on the week. I mean, you can do sector if you like, but it really doesn't matter. Last time I think we did look through healthcare alone, because I like the trade that I like to be in that biotech space. But with that criteria, we're given more stocks. As you can see over here, is 133. If we choose a sector, we're going to have less stocks to look at. So we're not going to look at all of these anyway. But also up here at the top it says signal. You don't have to use this, but up here at the top we have signal. You got top gainers, top losers. You can also put in here to help sometimes with your looking for those oversold bounces, but it's gonna minimize how many stocks you had to look at. See, it took us down to 18. You can just put in oversold up there also if you like. I don't use it very much, but I do on occasion. Um, then you want to click on charts. Charts is going to spread the chart out. You all know the routine right here. Like I put that in the group, the VICL. So let's go right ahead and take a look at VICL. Let's go right ahead because I'm looking at that. I already got my eye on that. VICL. We see it's got a lot of sell off, short period of time, down. We like it to be over 50% or better, but sometimes we make an exception to that rule. But I mean, it was trading up here at, I guess, about $1.15. Now it's down to $1.80. Pardon me. Now it's down to 80 cents. It may have some more selling off to do. We'll look at it again. You know the criteria. Um, we're looking low float. Low shares float is low, 22 million. Preferably under 50 million. Short float interest is not that high, but all right. So anyway, if we were going to trade this, let's go right on over to Thinkorswim now, put this ticker in, and we'll do a few tickers. VICL, right? Put the ticker in and go ahead and take a look. Now we're gonna do this one day. That's the chart you want to be looking at. 1 year, 1 day. So now, let me see if I can blow this up. I'm gonna blow up that area. 1 year, 1 day. Will, as we're looking for potential areas of support, because this, we don't know when the bleeding is going to stop. We don't know when the bleeding is going to stop, what they call a falling knife, and you don't want to catch a falling knife. But we don't know when the bleeding is going to stop, because we look left and we don't have this stopping anywhere in the past over here. Say, like, if this was a bottom over here and we had that same bottom over here, we could kind of get an idea and say, oh, maybe it'll bounce off this area. It'll bounce off this area of support, right? That's what we would generally call support. But you see this thing, it's not finding any support right there. So what we want to do initially, what we really want to do is we want to watch this until it puts in a green day over here. And I'll show you that on INSY, what I traded earlier today, how it's set up with a green day first. But just for, learning purposes, say we were going to trade this, and it put in a green day over here. What we want to do is go here, look at this candlestick, the previous day's candlestick, and check out the high and the low. What was the high? What was the low? Right? So the low was 80 cents. That's today. The low is 80 cents. So we're going to go ahead and draw support line here at 80 cents. All right? We're going to draw some support at 80 cents. And there we go, right? So we say, boom, this is our support. If we got I'm going to show you a little better on a different camera. So now we got 80 cents as the low. Now we see it's putting in a green day over here. If we're seeing it putting in a green day only means this is a red day, this is a green day on the candlestick, a green day, like this, for instance. Let's just go right here and do it. Let's just take it from right there and go right here. Say the same thing. It's spilled out, and it start putting in that green day right here, right? This is what you. No, that's not. This is what you want to look for. It's starting to put in that green day. You're watching it for that green day. Now, what you want to do is check the high and the low on a candlestick the previous day. So the high for that day was 106. The low for that day was $1. So because the low for that day was $1, when we see it start making a green day, we don't have to wait for it to put in this whole day. We don't have to wait for this whole day, but we can. What's called candle over candle, right? We don't have to wait for it to put in this whole day. We don't have to wait this whole day and then get in here on that next candle, right? Let me get my pointer back. We don't have to wait on this day to get in on this day, right? We see it And the day, you know, if you're watching it, you'll see it. It's going green. It's a green day because you'll see the ticker. You'll see the percent gain. So what you want to do is, because this day here was the low was $1, you want to take this trade 5 to 10 cents above $1. Or maybe you can go ahead and get in on the low. If you can make it in on that low, because it opened at $1. This opened at $1, and that was the low for the day. Now, I don't try to get bottoms or tops because you never will. I mean, maybe you will, but it's kind of hard to do, to get the bottom and the top of any trade or any day. You know, so what you want to do is give yourself some room. You got the previous day's low, which is $1. You see the next day, it's putting in that green day. It's up. It's going up. It's turning green. What you want to do is try to get in there 5 cents to 10 cents, no more, above $1, the previous day's low. Now, you make your entry at 105 or 110. Why do we make our entry at 105 or 110? Because if this trade doesn't work out, we have that low, that $1 low as our stop, because we understand that it's coming down here, it's coming down. If it breaks that low, we can look for it to continue down. So we put our stop right here at $1, at the bottom, at the low of the previous day. So again, let me go over that and reiterate. You see it putting, you see it, you're looking for the oversold, right? You see it, the oversold conditions, you see it. You're watching it. You got it on the watch list over here, right? Here's the watch list. As you can see, you will see the change. It will be green. It'll be green or red, depending on what the stock or what the ticker is doing that day. The net change, you got percent change if I spread it out and open it up. But you can see that it's putting in a green day. If you got it on a watch, over here on the watch list, you got it over there. Pardon me, somebody's. Okay, and you got it showing green, right? So you know it's putting in green, and this is when you want to click on it. You see it putting in green. You want to click on it and say, okay, it's going green. I want to try to get in here 5 to 10 cents above the previous day's low. Above the previous day's low, which at that time was $1. Previous day's low was $1. So you want to try to enter that trade at 105 to 110, no more. No more than that. Why? Because you assure yourself that you only have room for 10-cent loss. You only have room for 10-cent loss. So again, if we get in here this day on this green day and the trade don't work out, we up, we come down, we stop out at the previous day's low, we lose 10 cents. But if the trade does work out, we capture that upside. We capture that upside. Let's go over here to, what is that? The ticker that we traded today. We could go ahead and see which one it is over here on FinViz. You go to FinViz Home, and on the home screen of FinViz, it'll show you the all the stocks that's up today. Oh man, it's not on there anymore. It got taken out. Well, let me just. And that's why. I read that. And that's why. We're going right over here to INSY. Right? INSY. Let me show you how this trade set up. Here. Over here, INSY. INSY. Let's get it. We got 1 day, 1 year. 1 day, 1 year. We're gonna go ahead, highlight that, blow it up. Try to get over so we can see that a little bigger. And here it is. Killing vents. Take the vents out of there. Come on. I don't want to see vents. I'll get them out. Whatever. So anyway, let's go ahead and move that back to what we're doing. Down here. So we got our drop. We got our drop right here. Boom. We got our oversold. This thing dropped from up here at what is that? 435 down to 82 cents. From 435 to 82 cents, well above 50%. Right? We got the drop there. And as you can see, it bounced immediately before we even got it on the radar, before we even got it on the watch list. But now, see, because it's still down, we watching. Once we get it on the watch list, we watching. We watching, right? We watching until we see that green day. Now we see that green day. Ideally, we want to see candle over candle. That's what we want to see. Make this bigger so you can see it. We want to see candle over candle. We want to see that candle over top of that candle, right? And we can still use previous day low, the previous day's low, which was 80 cents. We can use that as a stop, and we can enter the trade 5 to 10 cents higher on the very next day or that same day, because this ran from, this would have been a wonderful entry. This would have been a beautiful entry because for the day's high was 87. It opened at 80. The day's high was 87. The day's low was 80. It was a green day. I put in the green day. So the entry would have been beautiful if you could have got in here at 80 cents or 85 cents, because it didn't go up any further than 87. So you know the low. But you can use the previous day's low, which was 75 cents. See? Now, we got the previous day's low, 75 cents, right? We know we can enter this trade 5 to 10 cent higher because we're going to set our stop at the previous day's low. If we get in there 5 cents higher, we got more room to breathe. Or you can set a tighter stop. Your choice. We got room to breathe. You know? If we get in here for 5 cents the next day, if we get into this trade for 5 cents higher than the previous day's low, we got even more room to either set a stop even lower if you want to do that, or you can keep the stop at that previous day's low, which would be 75 cents. So you get in the next day or even this day. If you want to get in this day, this day is green. You could get in this day when it start putting in that green day, right? But this is confirmation. Candle over candle is confirmation. You know? Candle over candle is confirmation. It shows you better signs of momentum change because it gaps up a little bit. See it opens here. When you see a green candle, right? The bottom of the green candle is the open. The top is the close. I mean, it's open at 9:30 at this price, close at 3 o'clock at that price. And you see it opens a little higher than the previous day's close. You know? Which is a sign of momentum change. So anyway, back to it. We're looking for that green candle, that first green candle, right? See, because if you would have tried to get in on this day, right, which the low was 75 cents on this day also, right? You would have got in here at 80 cents and stopped out because the low also was 75 cents. And you would have missed that. You would have missed that move. Right? 80 cent, 85 cent. Okay, that previous day's low, 75 cent. You want to get in 5 to 10 cent higher than the previous day's low. And you want to use the previous day's low as your stop, where you'll get out of the trade. Because once it breaks that low, it continues down, as you can see on this candlestick, right? This candlestick here. The low of that day was $1.02. Now, let's say this is just the bottom, and we're looking to put in a green day here. This is $1.02. The very next day, the low is $1.02. Again, right? You said you get in here at $1.07, right? 5 cents higher, and you set your stop at $1.02. You get stopped out. You stop out. You sail out of the trade, and because that's our stop. Look, we know once if it hits or breaks that $1.02, look, it spills out. It's coming down. It has more room to go down. It's going down even further, like what we just showed you with VICL, right? VICL. Here, we don't know where the bottom of this is, right? We don't know where the bottom of this is. We don't know if this is going to continue down. We don't know. We don't know. Just like in this area, right over here. Hey, we could say, oh, this just come down. I want to buy here. We don't know. It continues down, but we don't know. We don't know. So that's why we want to use that day's previous day's low as our stop. And that's why we want to make an entry 5 to 10 cents higher than the previous day's low. This way, we only give ourselves 10-cent loss. So all we're willing to lose is 10 cents on every trade. We give ourselves 10 cents of downside. If it comes down there and it breaks that, comes back down to that low, we stop out, we're out of the trade, and it continues down. I hope you all are getting that. And that's how you set up. We'll go over another one. That's how you set up on the oversold plays. Let's just go ahead and get, we're going the wrong way. Let's just go ahead and get another oversold chart to look at. Really quickly, we just gonna go screener. We're not even gonna put in the full criteria. We're just gonna hit oversold up top here, and just pull any chart and go with it and see how we would set that trade up. Charts. How we would plan that trade. Okay, here we go. Wow, some stuff out here. Nice looking stuff here. Whew. Some really nice looking stuff. Playing that trade. Woo. It look like it beats hot stuff. We're gonna just look at this right here, SDT. Go right back on over to Thinkorswim and look at SDT. SDT. Look at that. No, SDT is still. Whew. No, we could get one better than that. So we can set up. Look good, man. They came tumbling down. It's 50 cents. I mean, it's 50%. Oh, TC. Let's look at this one. Let's look at TC. Let's look at TC. My goodness. Let's look at TC. Whoa. Do you see what I'm seeing? Are you liking that? Or are you not liking that? Are you loving that? Or are you not loving it? Look at that. Ooh. Look at all that bleeding. Man, I mean, I love the chart. I don't know if it fits the mold or it fits the criteria. You'll have to find that out on Finviz. But again, to set this trade up, we see this. It's done came out. It's done spilled down. We go here on this day, right? We're looking for the low. The low is 271. So if the low is 271, we gonna round it down to 270. Go right ahead and say 270 and try to enter this trade 5 to 10 cents higher than that. No more on the next day if it's put in the green day. I mean, if we could get in there at the low 270, we would love to do that, you know. But where do you put your stop after that? Where do you put your stop? I mean, you can use it. You could just use 10 cents as the criteria. All right, you get in there at 270 and you say, hey, man, I'm willing to take a 10-cent loss. So you put 260 as your stop. So that's okay. You can do that. But I like to do this like this to know where we stopping out at. We got this 270 previous day. We'll use that as our stop. We're looking to enter this trade on a green day, 5. If tomorrow was a green day, we'll be looking to enter this trade 5 to 10 cents higher than 270. It's real simple. We look into this trade, 5 to 10 cents to higher. And now, what is our profit target? Right? How do we know our profit target? Well, we're looking for support and resistance. Usually, or generally, previous support, and as you can see how when it cracked this, it really started to spill out. Let me draw it. Previous support starts to act as resistance, previous support up in this area starts to act as resistance. So we know that's where resistance is at the very least. It tried to put in a green day, it tried to bounce and put in a green day here. Ooh, man, I've been having an issue with the with the with the internet, man. They've been cool. Put it in the green day here, you know, and it got pushed back down. So we see this area here. This is where it tried to bounce. You see, it tried to bounce here on this day, because remember what the long wicks mean on a candlestick. The body of the candlestick is here. The top of the candlestick on a red day is the open. The bottom is the close. The opposite on green day. The bottom is the open. The top is the close. But these wicks means the high of day. This is how high the stock went for that day, and this is how low the stock went for that day. So we see it made a high all the way down here. Got rejected here and got pushed back down here. So since it got rejected at this high, we can go ahead and say that will act as another level of resistance. Right there. We can go ahead and say, because it got rejected there, that acts as another level of resistance, right? And we see the green day here and how it tried to find support at this level right here for 3 days in a row. It came down here, found support, didn't sell off, opened here, ran up here, got rejected, found resistance, didn't sell off, opened up again in the same area, tried to sell off, got rejected, pushed back up to this area, to this high, closed here. So we can say that this now is an area of support, right? And again, old support acts as new resistance. Old support acts as new resistance. Now, there we go. That is our first level of resistance here. Then we have a second level here. Then we have the third level of resistance here. So on this trade, our profit target, how we set this trade up is the lower day, 270. We want to enter on a green day, 5 to 10 cent above 270, man, we could even, if we could get in there 2 cent above, but yeah, we're generally no more than 10 cent above the previous day's close. We get in there, for no more than 10 cent above previous day's close, then we look to this as our profit target, this price, 422. So now we have 270 as our stop, 275 to 280 as our entry, with upside potential to 420. $4.20. That's our profit target. That's our upside potential. And we don't have to capture all of that move. Because again, what we do, we take profits. Take profits. But that's the potential there. You know, you want to set up your trades 2 to 1. You know, that means you're willing to, for every 20 cents, for every 10 cents you're willing to risk, at least there's 20 cent gain. At least there has to be 20% of gain. So with this 10 cent that we're willing to risk on this trade, there's almost what is 270, 33, about $1.50, right? If I'm not mistaken, $1.50. Yep. 50, yeah, $1.50, 420, if I'm not mistaken. No, pardon me. Hold on. 250. Y'all do the math. I ain't got my calculator. Forgive me if I'm slipping on the math tip. Let me go ahead and do that real quick because I want to know. Yeah, $1.50. I was correct. So you got $1.50 of upside. You're looking at potential upside, $1.50. We'll risk 10 cents to make $1.50. All day. All day. We'll do that. We'll take that trade. I hope you all are getting it and understanding how you set your trade plan. And that's the plan. And trade that plan. Don't change. If this thing come breaking through 270, you stop and you're like, oh no, man. I think it could go up. No, that's not the trade plan. Stay disciplined. Cut your losses. 10 cent. Stay disciplined. 10 cent and move on. You know why? You lose 10 cent on this and it'll keep going down. Okay, that's all right. It just hasn't found a bottom yet. But at some point, it will bounce. Why? Why? Market mechanics again, people. Market mechanics. You got a lot of panic selling here, and you got shorts piling in. No, short sellers, it's not just going to sit around and watch all of this price action and not capitalize off it. This is money to be made, this move down. This is money to be made. And that's why it's part of our criteria, the formula that I was explaining earlier today. Low float, high short interest, high volume, right? We want to make sure that there's a lot of short in this. There's a lot of shorts in this. Because again, a short trade or a short sale, essentially you're buying or you're borrowing shares from the broker, and at some point you have to buy them back. It's the opposite of a long trade. You buy to open, sell to close. Short selling, you sell to open, you buy back to close. And that's why the formula is low float, high short interest, high volume, lots of volume, liquidity. So we know if it's a lot of shorts piled into this TC, at some point it's got to bounce, right? So we take the 10-cent loss, we keep it on the watch list. It ain't ready. Okay, 10-cent loss. We watch it and try it again. Make another entry with a trading plan. But let's look over here and see. Yeah, it doesn't have a very high short interest. It does have an extremely low float. I mean, it's a low float. Short interest, not so much, 1.17, but I'm sure we could get more of that. I wanna go ahead and put this on the watch list for sure. We want to look at two limited hints. Punchy limited enters into agreement to acquire. Oh, they acquiring something. I don't know why that would cause that to dip like that. Must be a shoddy company that they're acquiring. I don't know, but I'm definitely going to keep my eye on this. This is the recipe here, people. This is the recipe. Wow, I love it. I'm loving it right now. This, I'm loving it. Man, we just stumbled across that. I'm hoping, I would like to see some more shorts get in here. I would definitely like to see some more shorts get in here, so we could get that bounce that we're looking for, that real bounce. I would love to see some more shorts get in here. Volume though, not so much average volume. No, we're gonna walk on by. We're gonna walk on by because the average volume isn't. It doesn't fit our criteria. But this is what you want to see. You like to see a chart like this, but you want it to have that volume. You want it to have that short float, you know. Did get a nice little bounce on this day, though. I'm going to see what was the range on that. What was the range? 55 cent. At a 55-cent range. I mean, we definitely willing to risk 10 cent for 55 cent. Now, of course, you ain't gonna get the bottom, you're not gonna get the top, but at least it's 20 cent there for you. But yeah, no, we're gonna keep it moving on that. Maybe one day it'll increase in volume. The volume will start increasing. Maybe it'll get some news that changes that. I've seen low floats with not that much volume put out some news and things just change like almost overnight. You got see, this is what I'm talking about. And this is why I say about the analyst. This is analyst Maxim Group. They put out a buy. You know what I mean? They put out a buy rating with the target price of $13. Look at this. They put that out May 21st, 2019. Goes to show you, analysts don't know what the hell they talking about. They just put out whatever they put out to keep their jobs, because the thing is, the real nitty gritty is news moves stocks. It's the news that moves stocks. These guys don't know what the next headline is, so they cannot tell you where this thing is going to go. That's speculating. They can speculate all they like, but I mean, it's a grain of salt. And whoever listens to analysts is, I don't know, more power to you, bless your heart. You know, they got a buy rating May 21st. What is it? June 6th. This was just a few days ago. Huh? They ain't see this coming. Cracking broke. They ain't see that coming, did they? No, they didn't. Anyway, I hope you all got something out of this. I don't want to take up too much of your time. I think we've been on here for 45 minutes, so I'm gonna go ahead and close it out and say good night to you all. I mean, if you have any questions, feel free to ask. Go right ahead and ask, and we can discuss it further. I appreciate your time. You all have a good night. Let's see, ladies. So, today we want to discuss um, And Congress is you don't have to up there the topics, top games, top movies. You can also put in here to help. Sometimes look for those oversold bounces, but it's gonna minimize how many shots that look at shit took us down to 18. You can just put in oversold up there also. I don't use it very much, but I do on occasion. Um, then you want to put on chart. Charts. Chart out. You want to know the routine right here. I put that in the group. Got CL. So let's go right ahead and look at the ICL. Go right ahead. So I'm looking at that. I already got my eye on that. The ICL. You see, we see. It's got a lot of sell off, short period of time, down. Like it to be over 50% or better, but sometimes we make an exception in that rule. But I mean, in this trade up there, the gas is about $1.15 now, it's down to $1.80. I mean, pardon me, now it's down to 8%. They may have some more selling off to do. Look at it again, you know the criteria. We look at those flow, shares flow is low, 22 million. Preferably under 50 million. Short flow interest is not that high, but all right. So anyway, we were going to trade this. Let's go right on over to Think and Swim now. Put this ticker in. We'll do a few tickers. BICL, right? Put the ticker in and take a look. Now we're gonna do this again. It's the chart you want to do 1 year, 1 day. So now, that 1 year, 1 day. And as we're looking for potential areas of support, because this, we don't know when the bleeding is going to stop. We don't know when the bleeding is going to stop. They call it falling knife. We don't want to catch a blow. But we don't know when the bleeding is going to stop. Because we look left and we don't have to stop anywhere in the past over here. Say like if this was a bottom over here and we had that same bottom over here, we can kind of get an idea and say, oh, maybe it'll bounce off this area. It'll bounce off this area of support, right? That's what we would generally call support. But you see this thing, it's not finding and support like this. So what we want to do initially, what we want to do, really want to do is we want to look, we want to watch this until it comes in a green. I'll show you that on INSY, what I traded earlier. I would set up a green day first. But for learning purpose, say we were gonna trade this and start putting it, put in a green day. What we want to do is go here, look at this candlestick, the previous day's candlestick, and check out the high and the low. What was the high? What was the low? Right? So the low was 80 cents. That's today. The low is 80 cents. So I'm gonna go ahead and draw 4. Okay. 4 at 80 cents. There we go. Okay. So we say, boom, this is our support. And we gotta, I'm gonna show you a little better. So now we got 80 cents at the low. Now we see it's putting in a green day. If we're seeing it putting in a green day only means this is a red day, this is a green day. Or the candlestick, green day, like this, like this. Let's just go right here. Let's just take it from right here and go right here. See, same thing. Spill down out and and start putting in that green day, right? This is what you this is what you're going to do. It's starting to put in that green. Watching it for that green day. Now, what you want to do is check the high and the low on the candlestick previous. So the high for that day was 106. The low for that day was $1. So because the low for that day was $1, when we see it starting in the green day, we don't have to wait for it to put in this whole day. We don't have to wait for this whole day, but we can. What's called candle over candle, right? We don't have to wait for it to put in this whole day. We don't have to wait this whole day and then get in here for that next thing, right? We don't have to wait on this day to get in on this, right? We see it in a day, if you watch it, you'll see it, it's going green. It's green there. Because you'll see the ticker, you'll see the percent. So what you want to do is, because this day here was the low was $1, you want to take this trade 5 to 10 cents above $1. Or maybe you can go ahead and get it on the low. You can make it in on that low because it'll open that $1. This opened at $1, and that was the low. Now, I don't try to get bottom or top because you never. I mean, maybe you will, but it's kind of hard to do. Get the bottom and the top, then you get the. So, what you want to do is get yourself. You got the previous day's low, which is $1. You see the next step. It's putting in that green day. It's up. It's going up. It's turning green. What you want to do is try to get in there. 5 cents to 10 cents, no more, above $1. The previous day's low. Now, you make your entry 105 or 110. Why do we make our entry at 105 or 110? Because if this trade doesn't work out, we have that low, that $1 low as our stop, because we understand that it's coming down here, it's coming down. If it breaks that low, we can look for it to continue down. So we put our stop right here at $1 at the bottom, at the low, previous day. We're going to go over that and reiterate. You see, when you see it, you get the look over the soul. Right? You see it, all the soul conditions, you see it. You watch it. You got it on the watch over here. Right? Here's the watch. As you can see, you will see the change. It will be green. It'll be green or red, depending on what the stock, what the ticket is doing. And that change, you got percent change, I'll spread it out and open it up. But you can see that. It's putting in a green there. You got it on the watch. Over here on the watch. You got it over there at the Cardinals. And you got it showing green. Okay? You know it's putting in green. And this is when you want to click on it. You see it putting in green. You want to click on it and say, okay, on green, I want to try to get in here 5 to 10 cents above the previous day's above. Above the previous day's above, which at that time was $1. Previous day's low was $1. So you want to try to enter that trade at 105 to 110. No more. No more than that. Why? Because you were sure for yourself that you only have room for 10 cent loss. Only have room for 10 cent loss. So again, we get in here this day on this green day, and the trade don't work out, we up. We come down, we stop out at the previous day's low, we lose 10 cents. But if the trade does work out, we capture that upside. Capture that upside. Let's go over here to this. Take it out.
Turn the light on.
Here. And this home. And on the home screen of Windows, show you the all the stocks and stuff. And that's why.
I'm sorry? Want some avocados? Those other 2 eggs? We having some bean pie and salad, baby. Yeah, bean soup. Damn, I still got bean pie in there. You know, I ain't had no bean pie in a few days.
That's why I make sure you got it straight.
I ain't forgot I was in here. Apple pie and everything, huh? Say what? Very hey, pretty baby. Hey, pretty baby.
See,
There you go.
yeah,
I'm on 3 days.
there it is.
I'm sorry.
Oh, excellent thing, yeah.
That shit is conflicting. They gotta get in here and fix that. I'm going back tomorrow.
Yeah. Sorry.
Yeah, no. Yeah, kicking the door, waving the 4-4.
Down here. So, we got our drop. We got our drop. And boom, we got our oversold. It's been dropped from up here, 435, down to 82 cents. 435, 82 cents. Well above 50. Right? We got this drop. And as you can see, it got the median. We even got it on the radar. We even got it on the watch. But now, because it's still down, we watch it. Once we get it on the watch, we watch it. We watch it. Right? We watch it until we see that green day. Now we see that green day. Ideally, we want to see candle over candle. That's what we want to see candle over candle. We want to see that candle over top of that. Right? And we can still use previous day low. Previous day's low, which was 80 cents. We can use that as a stop. And we can enter the trade 5 to 10 cents higher. The very next day or that same day, because this ran from, this would have been a wonderful entry. This would have been a beautiful entry. Because for the day's high was 87, days it opened at 80, the day's high was 87, the day's low was 80. It's a green day, but in the green that so the entry was beautiful. If you could have gotten in at 80 cents or 85 cents, because it didn't go up any further than 87. So you know the low. But you can use previous days, which was 75. See? Now we got the previous days low, 75 cents. Right? We know we can enter this trade 5, 10 cent high. Because we're going to set our stop at the previous day's low. If we get in there 5 cent high, we got more room to breathe. Or you can set a tighter stop. Your choice. We got room to breathe. Now, if we get in here for 5 cent the next day, get into this trade 5 cent higher than the previous day's low, we got even more room to either set a stop even lower. If you want to do that, or you can keep the stop at that previous day's low, which would be 75 cents. So you get in the next day, or even this day. You want to get in this day, this is what day is green. Get in this day when you start putting in that green in, right? But this is confidence. Candle over candle. Candle over candle. show you better signs of momentum because it got trouble. You see it open, see it when you see it green. Bottom of the green candle, top is open, and 9:30 at his price, close at his bottom. And you see it opens a little higher than the previous day's close. You know, that which is a sign of momentum. So anyway, back to it. Looking for that green candle, first green candle, right? See, because if you would try to get in on this day, right, which the low is 75 cents on this day also, right? Would have got in here at 80 cents and stopped out because the low also was 75 cents. And you would have missed it. You would have missed that move. Right? 80 cents, 85 cents. Okay, that previous day's low, 75 cents. You want to get in 5 to 10 cents higher than the previous day's low. And you want to use the previous day's low as your stop, where you'll get out of the trade. Because once it breaks that low, it continues down, as you can see on this candlestick. Okay? This candlestick here. The low of that day, $1.02. That is bottom. Looking to put in the green. This is $1.02. Every next day, $1.02. Again, right? You said you get in here at $1.07. Right? 5 cents higher, and you set your stop at $1.02. You get stopped out, you stop out, you sell out of the trade. Because that's how it stops. Look, we know once if it hits or breaks that $1.02, look, it's still going. It's coming down. It has more room to go down. It's going down further. Like what we just showed you with the yeah. Here, we don't know where the bottom is. Right? We don't know where the bottom of it is. We don't know if it's going to continue back. We don't know. We don't know. Just like in this area, right over here. Hey, you can say, oh, this is up down. I want to buy it. We don't know. It continues down. We don't know. We don't know. So that's why we want to use that previous day low as our stop. And that's why we want to make an entry 5 to 10 cents higher than the previous day's low. This way, we only give ourselves 10 cent loss. So all we're going to lose is 10 cents at the trade. We give ourselves 10 cents downside. It comes down there and it breaks that, comes back down to that low, we stop out, get out of the trade, and it continues. That's how you set up. Go with another one. That's how you set up. So, but let's just go ahead and get another soul chart to look at. screener. We're not even gonna put in the full criteria. We just gonna hit over the soul up top here, and just pull any chart and go with it and see how we would set that trade. How we would plan that trade. Okay. Nice looking stuff. Let's look at this right here, SDT. Go right back on the thing is swimming. Look at SDT. SDT. Okay, no, SDT is. Hmm. 50 cents. 50%. Oh, TC. Let's look at this. Let's look at TC. Let's look at TC. Wow. Let's look at TC. Whoa! Do you see what I'm saying? Are you liking that? Or are you not liking that? Are you loving that? Or are you not loving it? Look. Okay. Ooh. Look at all that bleed. Man. I mean, I love the chart. I don't know if it fits the mold criteria. I have to find that out. I'm saying this, but again, set this trade. We see this. It's not bad about it. It's not spill down. We go here on this day, right? We're looking for the low. The low is 271. So if the low is 271, we gonna round it down 270. Go right here and say 270, and try to enter this trade 5 to 10% higher. No more on the next day. I mean, if we could get in there at the low 270, we would love to do it. You know? But where do you put your stop? After, where do you put your stop? I mean, you can use you can just use 10 cents as the criteria, right? You get in there at 270 and you say, hey, I'm gonna take a 10-cent loss, put 260 as the stop. That's okay. You can do that. Like this, know where we stopping out at. We got this 270 previous day. We'll use that as our stop. We're looking to enter this trade on a green day, 5. If tomorrow was a green day, we'll be looking to enter this trade 5 to 10 cents higher than 270. It's real simple. Looking to enter this trade 5 to 10 cents to higher. And now, what is our profit? Right? How do we know our profit? Well, looking for support and resistance. Usually, or generally, previous support. And as you can see how when it cracked this, then we saw it's still out of control. Previous support starts to act as resistance. Previous up in this area. So act as resistance. So we know that true resistance is at the very you try to put in the green, you try to balance. Put in the green day in. Ooh, man, man, they've been cool. Put it in the green here, you know, and I push back down. So we see this area here. This is where it tried to bounce. You see it tried to bounce here on this day. Because remember, with the long wicks on the candlestick, the body of the candlestick is here. The top of the candlestick, on a red day, is open, the bottom is closed. The opposite. On green day, the bottom is open, the top is closed. But these wicks, the higher day, this is how high the stock went for that day. This is how low the stock went for that day. So we see it made it all the way down here. Got rejected here and got pushed back down here. So since it got rejected at this high, we can go ahead and say that will act as another level. Right there. We can go ahead and say, because it got rejected there, read that acts as another level. Right? And we see the green day here, and how it tries to find support. Like this level right here, 3 days in a row. Came down here, found support, didn't sell off, opened here, and up here, got rejected, found resistance, didn't sell off, opened up again, same area, tried to sell off, got rejected, pushed back up to this thing, to this high, close here. So you can say that this thing is an area of support, right? And again, old support acts as new resistance. Old support acts as new resistance. Now, there we go. That is our first level of resistance. And we have a second level. And we have third level of resistance here. So, on this trade, our profit target, how we set this trade up, is lower than 7. And on a green day, 5 to 10 cents above 2.7. And we get in there 2 cents above. But yeah, we're generally no more than 10 cents above the previous day's close. We get in there. For no more than 10 cents above previous day's close. Then we look to this as our profit. This price 422. So now we have 270 as our stop, 275, 280 as our entry, with upside potential $4.20. That's our profit. That's our upside potential. And we don't have to capture all of it. Because again, we do, we take profit. Take profit. But that's the potential. You know, you want to set up your trades too. You know, that means you're willing to, for every 20 cents, for every 10 cents you're willing to risk, at least there's 20 cents. Yeah, at least you have 20 cents. So, this 10 cents that you're willing to risk on this trade is almost what?
It's what 270, 33, about $1.50, right? Yeah, yeah, $1. Yeah, get me on slipping on the head. Let me go ahead and do that real quick. I want to know. Yeah, $1.50. So you got $1.50 of upside, potential upside, $1.50. We'll risk 10 cents to make $1.50. Okay, okay, we'll do that. We'll take that. I hope you all get it. Understand how you say you trade that. And that's the plan. You trade that and don't change. If this thing come breaking through 270, you stop and you're like, oh, no, man, I think you can go up. No, that's not the trade point. Stay this, watch your loss. 10 cents. Stay this 10 cents and move on. You know why? You lose 10 cents on this and it'll keep going down. Okay, that's all right. It just hasn't found the bottom yet. But at some point, it will bounce. Why? Why? Market mechanics. Market mechanics. You got a lot of panic selling, and you got shorts piling in. No, short sellers. It's not just going to sit around and watch all of this price action and not capitalize on it. This is money to be made. This is money to be made. And that's why it's part of our price. The formula that I was explaining earlier. Low flow, high short, high value. Right? And short, there's a lot of short. There's a lot of shorts. Because again, short, shorts, essentially you're buying or you're borrowing shares from the broker. And at some point, you have to buy that. It's the opposite of a long trade. Buy to open, sell to close. Short selling, you sell to open, you buy back to close. And that's why the formula low flow.
Mm, mm. Fucking mm, mm.
So, and we're going to do this. Um, okay. So, there's a lot. Now we see it put in the green day. We see it put in the day of green day. This is the red
You're
day.
killing me,
This
man.
is and like this.
Look at this. All it is this, man. Nothing. It's been everything. It's been.
Next day, the loan's $1.02.
Get to this point, and it's just that. The rest of the fucking joint.
So,
I'm gonna go ahead and touch on it again.
so man, we have 270 and stop.
Well, this is, I'll give him enough. To get the chance.
This case, two biggies, you know.
Take profit. But that's the potential.
ASAP, Rocky.
What do I said to give them, they hold it like.
They need to be fired.
The first one, second of all, like, we had to be called twice. And that person should have contacted you. Because
You viewed it? Keep it?
Huh?
You looked at it? The screenshot.
I couldn't see it. I kept trying to
No,
log
I'm
on.
talking about on Facebook.
No, not yet.
I got you up there and view it. You didn't watch it.
So I clicked
You seen
clicked
it.
on it just to see.
Mm-hmm.
I mean,
Mm-hmm.
do my thing.
All right. That's what you do.
Good.
Mm-hmm. Everything's good for you. She's down there. That's it. They have some toast with it.
Yeah, of course.
I'll take that.
Another right there.
Thank you, sweet baby. As soon as you said it, I smelled it.
Yeah, my boy.
So she sent me something on Facebook, Messenger. She didn't call me.
I'm really certain at all.
About
Arizona,
yeah.
egg, avocado, and onion. That's it.
Put it in. Yeah. Yeah. You gotta sprinkle it and then bump the turmeric right there in the middle. Okay? And I'm just confirming. Okay. Hee.
You want more?
We gonna kill that thing. You gonna eat the rest?
Make it sure.
I like it. Just kill it off. Let's kill it.
Just make it sure. Doing a great job.
Something. This here. Put this stuff here.
Yes.
Oh, thank you. Appreciate you. You're appreciated.